Hello guys, welcome to another episode of Ripster Daily Trade Recaps and Daily Teachings. Before we start, quick disclaimer: anything we discuss is just an educational and not a financial advice. All right, guys. Hopefully, all of you are staying safe in this market route. So I would like to talk about a little bit about the risk management. Of course, I teach you all about trading, the downside, and making money. But also, I would like to touch base on the long investors. I get a lot of DMs who are long-term investors, swing investors. How you manage the risk and what you could do mentally and psychologically to survive such these type of market cycles. So we'll talk about that. We'll talk about all that. We'll talk about our huge sell-offs, the shorts we have been doing, amazing trades, earning setups. So you can look at some earning trades as well. Another very good day for us. We had few losers in the morning. We will try to figure out, but losers were small, and then the shorts the gave us huge winners. So we'll discuss all that. We go through everything. I'm gonna try to go fast today, but let's do a quick introduction for anybody who's new to our X accounts, new to our YouTube, new to our community. So we trade a repeatable system called Ripster EMA Cloud System, and it also includes all my teachings that I have been teaching freely on X, on YouTube from 8-9 years. My teachings about mentality, psychology, day trading, swing trading, investing. A lot of my concepts that are used by thousands of traders across the world. To trade consistently, right? And we do the same thing and use the same thing in our community, Tanner Trade Group, which is our private community, which is one of the largest live trading community. We have a lot of tools there. We have option flow scanners, stock scanners, breaking news alerts, order flows. We have tools worth $500-600 which are completely free to trade in the community. And of course, we have my webinars, my presentations are all there. But you can also learn from my YouTubes. I have 1,000+ videos, recaps, webinars out there if you really want to learn it. I show you every day how to trade the bull markets, how to trade the bear markets, how to survive the bear markets. That's why I try to show you the time-stamped guidance, time-stamped trades. I sometimes show you my executions, so that no hindsight, so you know how to survive, and how to trade consistently, keeping losers small, winners big. All right, so we're going to talk about this. What we do is we have a pre-market plan. I make this plan live in the community. I go through my plan. We have a news plays, earning plays, we have upgrades, downgrades, and I have a general game plan that I provide to the traders in the pre-market, and we follow the game plan and trade accordingly. We provide a lot of other information as well in the pre-market. We have a wake-up summary. We provide future levels for future traders. We provide crypto levels which were good. Pause the screen, look at how the crypto performed today. So you simply had to take those levels, use Ripster Clouds, and trade consistently in the markets. We also trade something called day 2 day 3 strategy. I did a free webinar on this. There's a webinar in my community. I teach. There's a different playlist of each setups on my YouTube. You can go and watch and learn. All right, so just want to do a quick introduction. I'm usually on voice. I'm usually on live screen all day. I'm on voice for first few hours. Thousands of traders are on our trading floor. So I'll show you what my guidance to all the traders was, what was my timestamp guidance, and how we traded all the setups, winners and losers. So let's start with the today's recap. So guys, as you know, the market has been selling off, right? But it's not the market. So first of all, let's make something clear. SPX is the first day it really sold off, right? So far, SPY has been okay, just a little bit tiny whiny down from its all-time high. The most of your just 3% down from the all-time highs. That's about it. And QQQs, which is little more down today, but these stocks, these companies are heavily weighted with the Magnificent Seven, and they have others, retails. If we can always look at a sector analysis. Always do your sector analysis. Build a sector analysis tab. You can do that. You can build an Excel. We also have a sector analysis Excel, and so you can see that what sectors are really selling off, right? The software as service is really taking a lot of hit. Cathy Wood stocks are taking hit. Cyber stocks are negative. Cloud computing is negative. Internet is negative. So many of those stocks which are this needs to go from here. So they are negative, right? What is green? Home builders are green. The key regional banks are green. Retail is green, materials is green. So that is keeping S&P safe, right? That's speaking because S&P has all those stocks equal weighted, where every stock is equally weighted. They're still at the all-time highs because most of the stocks in S&P 500 are doing pretty good, right? So the 401ks are no problem. Your IULs, your 521s, they have no problem, right? So they are fine if you're an investor. But what we have seen over last 1 year, since the rate cuts, right, we have seen hot themes, the growth stocks, the so-called overvalued stocks running, right? So we call it hotties, right? We call the hot sectors, they're running, right? Like rockets, drones, quantums, nuclears, all those stocks, their chart was parabolic. If you look at those charts, were parabolic. All the growth stocks were just running crazy. The AI names were running. So that's what we saw. Now what happened? So what happened was, when first of all we talk about Fed, they paused rate, the rates were paused, and then Fed Watch was selected, nominated. Who believes in quantitative tightening? You can Google what it is. Who may cut the rates, but he will not take the liquidity out of the markets. So everything since then, market got scared, and all the growth stocks starting to take hit. But in addition to that, something else was happening. Anthropic, their new AI agent, their code base is just doing everything the software companies could do. They have launched those plugins and everything, and the fear in the market that all the software companies are going to lose business. And you can literally see every day the sell-off is it's just insane, right? It's just insane sell-off. You take any software stock is just getting dumped pretty hard. On top of it, we also have crypto route, Bitcoin, and that again goes back to Fed watch, the rate pause, and a lot of macroeconomy things changing. So the crypto hit hard as well. When all this happened, guys, when you see such a big, a lot of traders are invested in the growth names, a lot of traders are invested in the Bitcoin. First of all, you need to understand why is all this happening. So once you understand that, then you need to be ready. When you invest in the market as a long-term investor, you need to understand the market cycles. You need to understand there's a bull cycle and there's going to be a bear cycle. Whether the bear cycle is for entire market or the bear cycle is just for that sector. You need to understand that, and you need to be ready for that. So just saying it's painful means you are not ready, you do not understand the market. A lot of the growth stocks been running. Nobody complained when a stock like ORCL, with no revenue and profits, ran from $17 to $180. Of course, some people complained, but investors were happy. The same market can value the same stock 20, 30 times its earning, and it can value the same stock at 5 times its earning, depending on the market sentiment. The environment, it's much more than what's actually the fundamentals. The short term, the sentiments rule. So that's why the software is getting hammered. So when something like this happens, you need to reposition yourself. If you're a long-term investor, first of all, if you're a long-term investor, you should always be buying on the corrections. If you're a long-term investor, I personally do not believe that you should do any investment without stop loss, right? If you're a long-term investor, you should not be buying at the top of the cycle. You should not be buying at the top of any cycle. You should not be buying at the top of the cycle. Market has a cycle. Market goes down, market goes up, market goes into the chop, and market then goes up or down. So any cycle, you want to be an investor at the lows of the cycle. So if somebody was buying, tells me, hey Rip, I was a long-term investor in Nvidia, then at 210, then that's the risk you took. You bought it at 200 at high of the cycle. If you tell me you're a long-term investor on Tesla at 400, that's the risk you took. But again, these are Mag 7s. These are not even destroyed yet. These are pretty safe. Now, if you tell me that you were an investor in PLTR at 200 and it's 130 now, yes, you were wrong. I told the investors that your stops are at 150. I clearly mentioned it. So first of all, you need to know whenever you buy a position in the market, we will do detailed webinars and discussions on the position sizing and the portfolio allocation, all that. But the risk management is key. If you're buying 10 positions in a portfolio, you need to know if what would I do in case the market corrects. You should have an answer for that before you take a position. What would I do? Just that, or you're thinking of selling off, maybe it bounces, selling off, it bounces. That's not the answer. If you invested in now such a great company at 150, the support is at 135, you should be getting out of it. I don't care, it's a long-term investment. You can always buy again at the lower price, because unless you don't care getting down from 130s all the way to hundreds, you do not care, then that's fine. As a long-term investor, yes, maybe, that might be a wrong example, because we don't really know if this AI is really here to stay, or it's just a fake panic. I would love to buy now around 80 to 100. In this zone, I can buy at 100, put my stops at 90 or 80 bucks as a long-term investor, because I'm buying at the lows of the cycle. I'm not buying it here. Now, if you buy it here, up here, you need to know, what is your risk, what is your reward. Any investment you take, you got to say that to yourself. And if you are down, your portfolio is down, there's no need getting depressed, getting sad. We learn. As long as you breathe, you're healthy, you can always come back. So do not stress about it. Learn from the mistakes and get back. Do not think twice about cutting a losing position. You will feel much better, much relaxed once you make a decision to cut your losing position. You do a mistake, you admit that mistake. Unless you don't really care. No investment is worth, unless you're doing a lotto trade, saying that it goes to zero. If your investment is down 50%, then you know what to buy, you just don't know when to buy. I don't care you have a high conviction on any stock, right? We talked about SoFi. I told the traders to cut it under 10.14, and for 2 years it went nowhere, and I told the traders to buy it over this 10 multi-year breakout. Even from that investment, the investors made 3 times their money, 2 times their money. So you need to know. So ask yourself, I know what to buy. Do I know when to buy, or I'm just buying without a system? Have a system, have an investing system, have a swing trading system, so that you are ready for this market downturns. Remember, S&P is still holding up. Now imagine if S&P and QQQ gets to really sell off. And always track VIX when you're trading. VIX always tops around 28, 30, the bear cycles, and VIX is the best environment to swing trade, and best environment to hold your positions is when VIX is under 18, VIX is 16. Whenever VIX goes over 20 or 24, it's a volatile environment. Your swings, your long-term positions will be up one day, down one day, the gap will be huge one day, and so you just need to know that. So use those kind of information. We'll be launching our long-term tenant research, investment research website soon, so hopefully I could help you more there. But go back, watch my old webinars, and and learn to make money with the downturns. I teach you guys every day. Learn to make money in the downturns. Learn to make money when the market is selling off. So that keep a separate account, a long account, and keep a separate trading account, so that when market is selling off, come trade with me, come trade, or you can trade on your own. Learn from everything I teach you. Watch what I'm going to teach you today. Home runs, you grow your account. If your long-term position you do not want to cut, let's say you have an Amazon position which you do not want to cut because you added it a few months back as a long-term at 200. You don't want to cut it. That's fine. Maybe tomorrow, if it doesn't get back over 200, it can go lower to 190s, and if you're fine with that, you can short it within your other account and hedge your long position. So you got to do that. Okay, so if you need any help, always DMs are always open. I'll go to the market recap now. So stay strong. If your system says cut it, you cut it, move on. Preserve the cash, have the cash handy when the market corrects. You don't really need to find the bottom. Learn the concepts. When the reversal and consolidation comes from the support, that's what you really need. You really don't really need to find the bottom. All right, so never try to find the bottom. Never believe something is too low. Nothing is too low. It's a great example. PLTR is a great example. Hood is a great example. What there's going to be an opportunities there for sure, but you will never be able to find the bottom, and never try to do that. Always have your risk identified, right? If I'm talking about I want to buy Hood, yes, maybe if I buy Hood, 60-50 is a good risk for me. If I'm a long-term investor, I can risk $50, you know, I can risk $20 to maybe Hood goes back to 100. So I would rather buy it lower. So you have to have that kind of analysis. PLTR, maybe I'm a buyer risking versus 100, 110. So I would love to see. So you have to have that kind of plan before even you press the button, right? And your risk should be divided in your portfolio. Anyways, let's start with today's recap. I'm gonna go a little fast because I spent too much money on this part here. All right, guys, let's start with you know, so just to a quick recap, you can see that the Cathy Wood stocks, cloud stocks, the crypto stocks, and all these stocks have been you know, getting hammered there. So let's see what was our plan for today. I'm going to go a little fast here. Same thing that I teach you every day. So, but it was a little different today. The plan on SPY QQ was different. VIX 2121 is key today. If we lose those levels, we will. If we hold those levels, we'll short the market. If VIX breaks out of that or breaks under that, then we'll long the market. So 21-21.50. But it was not easy at the open because VIX was playing games with us at the open. So if you look at the VIX chart here, let's take a look at VIX chart here right at the open. This morning when VIX opened, initially it dipped. You see this candle? It dipped under that. So that gives us a false sense that market might be bouncing. Look here. So we try to curl it. I told the traders to long the curls. Right, so we did that. We tried to told the traders to long the calls, you know, and but then there was an amateur move, and I could realize it. I could see everything. I would see that Mag 7 was not strong. I even tweeted about it. You know, It doesn't feel good. It doesn't feel an A+ trade. That's why I told the traders to size half. You see here? I told the traders stay in the long calls but size half because Mag 7 is weak. The market is not showing the move up, and also SPY is almost hitting towards the resistance here at the 50-51 MTF. So I don't feel any confident. So as soon as VIX bounced back, I told the traders back short again. VIX pushes over that level, you short back again, and from that short we faded from 681 all the way to 676. And same thing on QQQs, back short again, we faded, although QQQ curled a little bit later, but that was our trade right here. I explained it. VIX was curling, we tried to long, we took a loss here. $1.50 loss, but we made $4 to the downside. There's also it came at 10 a.m. So today you remember that sometimes it can happen. We have had an amazing trend days in a row. So this should help and explain everything how that you know, our VIX strategy works. But today was a little different because you see the pre-market low held and swiped, and we kind of thought it will hold, but although we were not 100% confident, we knew something is off. That's why I told the traders to size half, and as soon as we broke down, we shorted again on the SPY. ES futures was much better shorts there in the morning. Let's go to our next play here. Let's take a look here. All right, so next one we're going to look at is AMD. One was our main play today in the community. So let's take a look what was our plan on AMD here. Let's take a look. All right, so AMD. So plan on the AMD was simple, to trade it versus 200 psychological level. That was our game plan, to trade it versus 200 psychological level. I talk about psychological level over. So AMD was also with our QQQs. When QQQ was pushing, AMD was also kind of bouncing with it. You see that, and as soon as QQQ dumped, AMD broke under 200. It became a short. I told the traders it's a short. You short under 200, put your stops there and take it all the way down. So AMD, but this was not really our home run play. So let's take a look at a few of our home run plays. All right, so we're going to take a look at Oracle. So why Oracle? Why? Because Oracle was our high focus. Because why was that? Why was Oracle on high focus? It's because Oracle was our So Oracle was selling off with the software, and it had a huge red day yesterday. So we were watching Oracle for a day two move. So as soon as I see that Oracle is breaking down here in the second candle, you see little later, not early. This trade you could wait until 20 minutes. So when I see this breaking, I told the traders to short it. I gave the stops of 145, short it right here, close to 143.50, $50 risk, and take it all the way down. So the plan was, there was a daily chart, daily gap on Oracle. So let me show you the daily gap. You see this? This was our daily gap. So we had this daily gap on the Oracle chart right here. So I said 140 first target and 138 next target, right? So once we see that that it was a gap, so we hit our 140 target, and then it hit 139. It kind of bounced and stopped us out initially, then it faded all day long to the lower channel, right? It's also getting impacted with, so much capex debt. You need to understand the environment, also the software environment is impacting Oracle as well, because again, Oracle does have those softwares, and so that's kind of impacting and coming into Oracle as well. Just insane. Oracle is down, it's down 60% from its highs. It's just insane. 60%, pure insanity. And just remember when we were having this AI news, and this thing was just going crazy. So we'll be watching it tomorrow as well. But so anyways, Oracle was our great short versus 145 today. You could literally buy the puts and hold it all day on Oracle, and you could literally let's take a look here. So 140 puts went from $1.40 all the way to $5, 1,400 into $5,000. So that's why I say it's an elevator down, right? Even if you have a long account, you have a long position in a different account, you can, first of all, you shouldn't be buying and shouldn't be long on this bearish chart. I don't care you're a long-term investor or not, but you should not be long there. So you should short it, right? And let's say if you do have share, you can sell calls and make money that way. So there's many way, because Ripster Clouds and my teachings tells you how to short and how to hold with the Ripster Clouds all day long for a beautiful win. Remember, it's under all the bearish clouds. Ripster labels are bearish. Ripster 3450 clouds are bearish. There is no long in this one. So remember that. All right, so next one we're going to take a look at is MSTR. Why MSTR? Because we all know Bitcoin is getting destroyed. Bitcoin is getting destroyed. That's why we give a crypto sheet to everyone in the pre-market, right? And that's why we plan in our news plan how to trade these crypto plays as well in the pre-market. We make a plan for the crypto. So once I saw this, if I go to our day two plan, we watch Circle, we watch BMNR, we watch all these names so that we could short them because Bitcoin is weak. And same thing as that, when you see this weakness and there is nothing too low, we can keep selling off. You need to understand how leveraged this MSTR is on the Bitcoin. So you see, as soon as I told the traders short versus 120, watch the Bitcoin. As long as Bitcoin is weak, keep shorting. I gave the first target 115. You can see that. The second target I gave was 112. We hit 115 target pretty soon. We hit 112 target pretty soon. No need to cover. No need to cover. It's a simple bear flags. You see this, the support becomes a resistance right here. No need to cover. You hold your puts to roll into the further puts, and the next target I gave was 110. We hit the 110 target. We hit 17. Then I told the traders we are going to 100. We are going to 100, and I did tell them it's earnings after hours, so only hold if you if you can but you are willing to risk. It did touch 100, right? If you see that, it's never a hindsight from me. It's like a 100 magnet. When something is selling off, it goes to 100. So I did say that we won't be mad with 100, right? And we did see this 100 exactly bouncing at the 100. You see that? Of course somebody could scalp it, but this was the money maker, right? You could literally trade MSTZ. You buy MSTZ long when MSTR sells off. It used to be like a $4-6. You could invest in it. You could invest in his ETF, take it all the way up. You could buy it at 12, take it, double your investment there. Or you could, because it goes up when MSTR goes down, or you could short MSTZ, MSTU, you could short MSTX. There's many way to make money there, right? If you just want to trade MSTR, you short 1,000 shares, you let's say even if you're small account, short 100 shares, what did you risk, right? When I told you to short here, you risk $200. By the time we hit 110, you make $1,000, and you keep holding, you make $1,500, $1,600. And if you have a big account, you make 15 grand. You just need to hold. You just need to know what is your risk. I'm able to risk 1,000 to make 5, 6, 7 grand. That's why those days like this is an elevator down. Even in your long portfolio, if you're losing 20, 30 grand a day, you can easily hedge and recover those losses. So your long positions will be kind of break even, and when we bounce, you will make money that way as well on the long side as well. There was a few more shorts as well in the community. Earning a season, so it's a pretty big for us. Earning season is always huge for us. So the earning season that we were trading was so let's take a look here. Earnings season, EL, Elf Beauty, EL, and Confluence on Elf. EL was a short under 107. So both, ST Lauder has been pumped too much due to the Fed wash. I told the traders to short the pops on ST Lauder, and also there was a 100 psychological level. You could see that, just like a 200 psychological level on AMD. Remember those concepts, and you could short it, and you could literally take it down all the way to $90. You risked barely this $1,000, and you could make 5, 6 grand there. So that's how you want to do it. Ripster Cloud is working, and I will show you the losers, because we have winners, but the losers are pretty small. If I'm winning here, I'm making $10, and when I'm losing $2. That's the key, and I'm going to show you that. So let's look at another trade here that was doing with the psychological number. The psychological number trade was ARM long. We were not all short here. We also had a long setup, right? Psychological number is very important to learn the psychological number in your investments, swing trades, day trades. I showed you so many times. MSTER bounced from 100, reached the 100. AMD short from 200, right? 150 shorts, 50 shorts, 100, and ARM. So ARM beats on revenue. I told the traders trade versus 100, short under 8, long over that. Bearish buys. That was the plan. But when I saw the strength, I said it's not a short, it's a 100 psych long. You see this candle pulling back, you buy here 102, you risk $2. You ride the cloud all the way up. You put the stops at 1-2. As it starts to move, you put the stops under 1 hour MTF cloud, and you continue to move your stops up 104, 105, and you continue to move it up. You complete the MTF magnet from this level to this level. That's called the 1 MTF magnet setup. That complete, and you finally exit when we break the 512s. And if you buy at 103, you take half here at 110. On 1,000 shares, you already logged 7 grand, right? And the rest of the shares, you have 500. You will lock another 3,500 on that move on the 114. So that's how you make parabolic winners, guys. Even in this market, we found the longs because our system told us to long. No hindsight. You can see the pre-market guidance step by step. We are hitting MTF stops at 108. So that's how you do it, guys. All right, so next look at a losing trade here for us. Of course, we did had a small loss on QQU, but Tesla, when it was curling, we tried to long here on the Amatuer move. I told the traders 397 stops to long it, but as soon as the stops broke down, we exited. Keep small, because market was heavy. I said we keep small, so we exited. So we longed at right 399, and as soon as broke 397, we took a $2 loss, maybe a 30% loss on your puts. Just need to see, because when we win, we make 300, 400% on options, and we make $6, $7, $8, $10 on a per share profit. If I'm losing that, if I'm losing 50 cents, I'm making $3 when I'm winning. So that will keep you a long-term consistent trader. If that's what you do, that's gonna make you a consistent trader there, right? So we had some other trades as well. Let's take a look. One of our other losers, we tried to take long on SNDK and memory stocks, which actually they were not kind of a loser. They did give us a nice little push, so they were kind of a break even moves for us at the open, because there's a lot of memory demand. Qualcomm said there's a lot of memory demand. By the way, this was their MSTR plan in the pre-market. So Qualcomm said there's a lot of memory demand, so we're watching SNDK, and as soon as it pushed there, I told the traders to long SNDK for 12s. It kind of pushed so much initially, and then it never really gave any pullback too long, but it pushed it from like 570 all the way to 617. So you got to be fast and reject it from that level. So that was basically it. And there were many other praise. Lily was a day too short from MTF to the MTF magnet. I told that to the traders. Then we had a PLTR, which was our day too short. You can go to a day to plan. One of the top plays on day 2 PLTR. So that was definitely a good mover for us, and we tried to take it all the way down. Will be interesting to see what happens tomorrow. Robinhood was also interesting. There's a lot of opportunities after this, guys, and we will be watching those as well. All right, thank you. Hopefully you guys learned something today. Take care. Bye bye.